Good morning. It is Mary Bartos with the Bartos Group of Premier Plus Realty, and it is my distinct pleasure to have Cheryl Stokes at Lender from New American Home Financing with me this morning to talk about a housing update. Good morning, Cheryl.
Good morning. How are you today?
You know, I couldn't be better. It's summer. Today is August 13th. We like to date these things so you know when we give you data that it's relevant to today. And August 13th of 2020. And boy, has the time since February flown by.
It has. It has. It seems crazy how fast it's gone by and how busy we are.
Yes, absolutely. So we'll just kind of jump right into it. I mean, you know, it's 9:02. I'm sure people are going to be jumping in. I'm going to share my screen here. Hopefully it all plays well because we are live with technology. Look, Cheryl, it worked.
Yay!
Yay!
We love when technology works.
Oh, I love it when a plan comes together for sure. So, you know, Cheryl, as we mentioned, a lot has really happened since we started this back in, you know, the financial crisis. You know, the health crisis really didn't hit us so hard here in Southwest Florida as the financial crisis. Cheryl, would you agree to that back in, you know, I think March, 17?
I would. We're all feeling the effects of both, but I think the financial side was a little stronger here than the health side for sure.
Right. And then as we've gone forward, the health side came a little stronger in the state of Florida. Again, Southwest Florida has, you know, not quite, I guess, been hit as hard, which is a blessing, but we totally get what's happening in the world and where most of our buyers are quite honestly coming from.
Correct.
And just, you know, whether you have to get here and quarantine when you go back or when you had to quarantine from certain places when you got here. I mean, boy, we've had a whole host of things that we've been dealing with, so to speak, since March.
Yes.
So getting to that right away, we'll start jumping in.
Okay.
Let's make sure we can jump in. Let's see. This is where it always is an opportunity for growth. I might have to phone a friend. I don't know. Let me see if I can do something there. Let's see if this works. Cheryl, technology has worked. Yes. Streamyard, which we're using, is really awesome. It's different than Zoom, but it works a little bit different. And so we're always trying to make sure it's working right. So let's dive into what the analysts are saying, shall we?
Sure.
You know, this is kind of a, you know, sad and scary for a lot of folks that have, you know, are unemployed. And I don't want to make light of this at all. From a standpoint of new filings, cumulative new filings that have happened, and currently collecting on unemployment of 16.1 million. Now, Cheryl, whether that's one person or in this case, 16 million, it's too many.
I agree.
Unemployed and wanting to work. So we don't want to make light of that. But as you can see, the unemployment really since, you know, when it started to jump up in really April timeframe, as it was climbing to its peak in May, has still too high. And then some people aren't even getting it, or they've decided not to jump back in, or, you know, whatever various reasons. But where the majority of that is coming from, and I love this slide because this is great, great news. In the last month, 1.8 million jobs have come back and people gain jobs. And where is the biggest part of that, Cheryl, is here in the leisure market, leisure and hospitality. So restaurants. I know, Cheryl, are you eating out yet because your family has some high risk versus my family? Have you guys started to venture back out?
We really have not, but we do takeout. So we're still trying to support the industry, but we're not in restaurant yet.
Okay. Well, I've been hearing from different people, and again, that depends on, what part of the country you're in and how they're handling it. Like you said, you're doing takeout. For us, we really stopped eating out for a month when we felt that was the right thing to do. I have a very high risk sister, and so we didn't want to traipse it back into her house. She doesn't live with me. But, I do eat out 7 days for lunch. My figure supports it, Cheryl. Work hard for that, and probably 4 nights a week. So people are coming back to work in that, in hospitality, which is fabulous. We're seeing it also in retail. I think the other side that's a strong contender here is really government. Government, stop jobs. Now, mining, for those folks in Virginia, that's still down. But, I think from a standpoint, this is great, great news. Again, seeing 1.8 million jobs just in the last month come back. Now, interesting enough, as you start to look at this, we were in January, February, March running around in that 4%. Now, March started when the health crisis was starting to come in, and at the end of March, right, Cheryl, we were in the financial crisis. So that was the trigger point there. We went up in April to 14.7, but look, it has dropped, more than 4 points.
It has.
Which is awesome in my book. I think the bigger thing, and again, these are coming from Keeping Current Matters, the analysts that I track with, they are talking about core unemployment rate. And I'm going to read from my notes, Cheryl, because I thought this was interesting and why I wanted to bring it up, even though I'm not an analyst. These aren't my numbers, but I love hearing what they say because core unemployment is unemployment taking off temporary loss. So temporary loss of what was happening with the pandemic, and those that are just marginally attached, not really looking for a job. So we have gone up to 5.9% in June. And in July, we're coming down a tick. Great. I mean, again, if you look at the overall, if we go, back to this slide of 10.2%, that is not a good, that means, 1 out of 10 folks, in the US are unemployed, which is not good. But it's only like, a half of one if it, or a little bit over 0.6 of one. I don't know what 0.6 of my body is, Cheryl. Maybe I could take it off the sides and
there you go.
I don't know what that is, but at the end of the day, I like the way this slide looks out as well. If I look at the employed people, that's 9 out of 10. Here's this 1 out of 10 that's not. But this is a breakdown of labor statistics based on last Friday, August 7th. And what this is these are the temporary ones. So we feel, the analysts feel that these are going to come back. How do you feel as a lender and what you're seeing happening with lending?
I am seeing it. And, the question will always be how fast will those temporary jobs, will they come back to work? But I am seeing it change. I had several clients who basically went on hold because they were furloughed or their restaurants closed, whatever happened. But most of those are back at work now in my particular instance, and we have been able to move forward with their files. So I think the trend is happening. It's really going to be how fast does it happen for everybody? And we can only wish that it happens quickly for the rest of those people who are still on that temporary loss of job.
Without a doubt. It's horrifying if you're sitting without a job and you can't feed your children. As you and I both know, and that's near and dear to our heart, without a pandemic. And then you add a pandemic and it's like, oh, holy mackerel. But I liked how you segued into this next chart here. If you look at the white line, which is, the Great Depression, it's not as how deep it goes, but at how wide it goes. For how long? What's the longevity of this recession or crisis that we're in? Well, the Great Depression was 12 years. You and I are both old enough, and been part of this industry during the Great Recession, and that was 9 years.
Right.
Right? 6 to 16, crazy. The analysts are predicting this to be done, pretty much in year 3, but it might take a little bit of year 4.
Yep.
This is like hope and, sunshine and rainbows to me with what these Wall Street Journal survey of economists are saying. Now, we all know there's a whole bunch of different economists out there, right?
Right. There's a lot of variables.
There are a lot of variables, which, when we look back at what their forecasts were, and it's kind of like, down here, the Weatherman, he can pretty much depend in this time of year, it's going to rain in the afternoon, right? So
4 o'clock.
Right, 4 o'clock. And in the winter, not so much, so sunny skies and 70, So I don't want to, belittle these economists because they have certainly worked hard at this. But look at how great their predictions were. The average of these predictions that they delivered for April, for a Q2 forecast, so that's, April, May, June, they were thinking it was going to be down 30.8%. Cheryl, do you want to guess what the actual amount that it came in at?
31.
You are so darn quick. It was 32.9%, right?
So they were right there.
They were spot on. So you kind of look and see what those analysts that we looked at were saying. They were spot on. But Cheryl, there's more. What are they saying for Q3? This is really exciting to me, that these same analysts are predicting increases the original 5 at 25% to 15%, Bank of America being the least bullish, and Goldman Sachs and JP Morgan,
Yep.
the largest. Those guys, that's awesome. And then you look at additional 4, which, the Fed, CNBC,
Yeah.
Those guys are a little less, but they're not as low as Bank of America.
Right.
Or as high as our Goldman Sachs, JP Morgan. But wow, by the end of Q3, if this is true, that we're really going to see this, wow. They were telling us, remember that they were telling us it's like taking a tennis ball and tossing it as hard as you can and watching it come back up.
Yep.
Wow. This to me is amazing. As a matter of fact, I've got a couple of quotes that I love seeing. Lisa Shalett of Morgan Stanley, Chief Investment Officer. Cheryl, she said, as you can read, indeed, the worst ever GDP reading could be followed by the best ever growth in the third quarter.
That would be tremendous for everybody.
Right? For everybody. And for unemployment and for, housing and for, hospitality and for retail. I think, some of the retail is interesting because I think we've shifted how we've shopped. I mean, do the Amazon packages come to your door like they do mine?
They do.
Right.
They do. I think we'll have growth, but we'll have growth in different ways. I think something that we said a few months ago was the dynamic of where this growth is going to come from and how we determine it will change. We might be working from home. That might be what's driving our industry right now because people need larger homes. People need to rethink the way they use their homes. People might want to move to a less populous place. There's a lot of things that are driving what could be a great third quarter.
Yeah, I totally agree. This next, map to me is, kind of interesting because consumer spending compared to January of this year is, this yellow, which is in the most of the country per se, is, I don't know if you can, see this here, is 0 to 10% off.
Yep.
There's a few states that are over 10%. And then you've got, those that are less than 10%.
Yep.
So, that to me is not bad, right? I mean, I kind of shake my head like, wow. Cheryl, when we talked back in April and May, did you ever think we'd be having this conversation?
No. We were pretty uncertain what would be happening right now at that point in time.
The analysts were giving us hope. They were giving us not so much hope like we saw with their second quarters, but we felt good about third quarter. And I'll tell you, when we get to our local stats, what that looks like is just phenomenal.
Yeah, I think we're in our own little area doing really well in comparison to what we're seeing nationwide.
Well, in housing, it is unbelievable nationwide. I have peers that I talk to on a regular basis in California. I have peers in, Las Vegas. I have peers all over the state of Florida. I have peers in Connecticut, in Georgia, in Indiana. I'm doing a series of panels, Cheryl, that bring in some of these peers from other areas to hear what they're saying. We're sitting at multiple offers on well-priced properties. They've been doing that for a while, but theirs are off the chart. They're like on steroids in some of those markets. It's just, unbelievable how it's bounced in some of those markets. As a matter of fact, it's almost like Keeping Current Matters put this out. It's almost like a headline of a movie or, something that's unreal, right? I mean, headlines are designed, I love what they said recently. Headlines are designed to clarify, not terrify. I
think that's, I was going to say, are you sure? Or are they designed to terrify, not clarify?
Yeah, absolutely. That's what he said. I wanted to catch to see if you were paying attention.
Yeah.
They're designed to terrify, not clarify. And what we have to do is clarify. But these headlines are like unbelievable. An astounding rebound by Realtor.com.
Yep.
Sure, Zillow's saying, stared the pandemic right in the eye and hasn't blinked. Shockingly strong by Zellman. I'm blown away by some of these.
Yeah, but it's so true. It is so true and so totally unexpected back in February and March.
Without a doubt. And again, let's preface this. If you're still in the middle of, what I wanted to say, I'm not going to say because it was a curse word. But if you're still in the middle of just a storm, want to paint, roses and, unicorns and sunshine with this. We
of course
hope because your storm is going to change. Tomorrow is going to dawn and you're going to wake up one day and it is going to be awesome because this is what we're seeing already. Now, Quicken Loans, I wouldn't necessarily call them your competitor because they do loans, but they're not you. But their pandemic, he said the pandemic has not stopped the consistent home price growth we've witnessed in recent years. Talk about that from your perspective.
I mean, I think that would be absolutely correct. And I think that is because I'll go right back to what I said a minute ago and we said a couple of months ago. People are reviewing their lifestyle. They're reviewing where they live. They're reviewing where they want to live in the winter. I think we've had consistent price growth and home sales because we're placing a higher priority on our homes versus maybe travel or other type of consumer purchases. We're really, as a people, I think, rethinking where we live and how we live.
I love that you segued into that for two reasons. One, David Childers, who is one of the analysts that I listen to at Keeping Current Matters, he said the value of home has grown greater than ever in the last 4 months.
Yep.
I
saw an article this morning. Axios actually was talking about the strength in the housing market for the exact same reason that people are looking at continuing to work from home even as this begins to pass. They're continuing to think about the necessity of a home office, not their dining room table. They're the housing market is going to evolve, what may be for the positive because of this negative that has occurred.
You're spot on. Today we had a buyer that's coming in, and I was sending them properties with 3 bedrooms, 2 baths, and the buyer said, no, we need 3 plus a den. I have 2 kids, my wife and myself, and I need a den to work out of, and they're from New Jersey, and they just said, this just has to be. And they're not going to retire for a few years, but they want to be able to go back and forth from here and work from here. So you're spot on with that. From that perspective, it kind of leads us into that next point of, people are asking me, what do you think is going to happen with the prices? Again, I don't have a crystal ball, but here's what the analysts are saying. And Cheryl, I want to point out because Fannie Mae just a few months ago was saying that it was going to be 0.4% growth.
Right.
Look at how they have come back to this to say 4.4.
Yep.
And likewise, CoreLogic, who is down 1%, just a few months ago, their prediction was it was going to be down by 6.6%. Look at how that has swung for these guys about home prices. Now, Cheryl, I know we have some slides a little bit further, but, my goodness, interest rates, I know we don't want to date ourselves, but they are unheard of at this. It's like you guys are giving away money.
Yeah, they are historically low. We have been saying that for a year, and they continue to drop. But really, they are historically low. I think that's a huge driver. The purchasing power you have has increased tremendously due to the lower rates. Your debt to income decreases. You can buy more in a home. And I think that's going to continue. There's been no projections of changing that in the next 6 to 9 months. So I think that with a shortage of inventory is going to be the driver of these prices.
Yeah, without a doubt, which, if we can see this, kind of 3, 4, 5% increase, gosh, we've always said dirt is great to put your money. It continues to be great. If you look at the Treasury notes, they're like I didn't look at them today, but they're usually, like close to 0.1% or something ridiculously low, right? I mean, I'm exaggerating, but, why put your money there when you can put it in dirt, still see the increase, get the value of it in your, the space, the benefit that you're going to get with home, and, still see an increase. I think, like you said, it's kind of a no-brainer for what people are thinking about. Now, this Keeping Current Matters came at this from a national number, but purchase applications on your side, would you agree to these numbers, what you're seeing?
Oh, yes. Purchase applications are definitely up. And a lot of people are currently evaluating with these low rates where our volume is coming from. Is it coming from purchase or is it coming from refinance? I can't speak for the industry as a whole today, but I can say that 75% of my volume is purchase volume. So it's not just that people are refinancing their homes to take advantage of the great rates, which they should get an evaluation to see if it is worth doing. And a good lender will properly evaluate and guide their client as to whether it is worth the expense of refinancing and does the savings pay for itself over a short amount of time. But the purchases are off the charts because there is more opportunity for those who are working, for first-time home buyers to get in at these low levels, for second home buyers to get that home that will someday be their retirement home. And there is that opportunity for the people who want to move up. They have a small family, it's getting larger, they are reevaluating how they're going to live and work, and now they need that larger home. So it really provides an opportunity for every section of buyers, regardless of what stage they're in.
Without a doubt. I just love that point that, This isn't just this is across our whole market, not just one segment of it. It's across the whole market, which, leads us to a slide for showings. We saw this, you've seen me, showing time is where we schedule a lot of our showings through. We use the tool, it's used nationwide. And you can see what happened in, May. We turned and look at the jump between May 5th and May 19th. That just went up. Now, I don't know if nationally, July 7th, because of the 4th of July holiday probably, and then jump back up because you can see that. Now it's coming down a little bit, but that's historically normal. Like in August, people get ready to go back to school. Their kids get back to school. It's just kind of what they do.
Yep.
Yeah,
they've made their decision for fall at this point.
Right.
And then we'll get the fall buyers in late September.
Without a doubt. So that's not unusual. And by the way, in our market, we'll talk about that in a hot minute. But, we have people that are buying virtually. So we're setting up an appointment and they can't get here because some states need to quarantine coming back from Florida. By the way, there's less and less each day, but some states do, and they don't want to risk it. So they want to look at it online and then decide if they want to come down or not by sight unseen. Cheryl, you've got to talk about this from a standpoint of what's happening with, interest rates, what we're seeing.
I mean, again, this I think is going to continue for the near and medium future. We are not seeing anything at all that's going to change this. Some are predicting that it will be this way for at least another year. So it will continue as we do come out of it, as more people do go back to work. It will just continue to provide that opportunity for your buyers to find what works for them and their particular demands at this time. The real concern we have with these great rates is we do have many clients that are on hold because there's just not any inventory available for them. They can't react quickly enough, which then leads me to say, again, get yourself pre-approved and completely prepared so that you can act quickly when you do find that property and get one of these great low rates locked in.
I heard two things. If you're buying, get prepared, get all your paperwork so you can submit it. The second thing I heard is we need inventory. And I'll echo that as well. I mean, let's just look and see what's, happening in our area. We used the showing time graph that keeping current matters. This comes directly from showing time in the state of Florida. So not necessarily our area, but look, you'll see April 7th, we hit the bottom and we've come back up. Here, as we were going down in the state of Florida, we were peaking around July 13th to the 20 something. So I think that's why we saw this trough over here. And then it's coming back up. So, our showings, and by the way, people don't need as many, to see as many properties as they once did to buy a home. And they are buying sight unseen, which is amazing. You're seeing this in our local pendings. If you recall from some of our former housing updates, you saw some of these charts where, again, this in April 7th, we hit the bottom with pendings, but you've seen it climb. And look at this, Cheryl, July 29th and all the way over here to where we were at a peak in February. Oh my gosh, we're right on.
We're right back to where we were. Yep.
Unbelievable.
Yep.
Now, moving this forward a little bit, this little deceptive slide, and I'm going to speak to it. It shows we still have inventory. Active listings are down. We usually get less listings in the summer. So that's kind of normal. But if you look at that and then you look at sales, sales are going up. Excuse me. If I just did my stats to kind of look at this from a perspective, our team, Cheryl, in 2019, can you guess how many families we helped? Excuse me, not a COVID cough. In 2019, between May and July,
Between May and July, I
Yeah.
am going to say 100.
Good guess. A little high. We helped 58 families between May and July of 19.
Okay. And where are you this year?
In the same category, we're at 107. So we've more than doubled.
That's tremendous.
It's amazing. I have different stats from different places that we look at, and single family homes, in one of the areas I collect them, because in our area we have two MLSs. We have Southwest Florida MLS, and then we have a Marco MLS. Why that is, beyond me. But we do. And the Marco MLS does give me statistics simple and quickly. And in this same period of time, May through actually today, single family homes are up pending, which is a leading indicator, by 80%.
That's amazing.
Lots are up by 112%. And then you move back to condos, which were anemic for the last year or so, are up 28%. So that's just in the Marco MLS, that it's price points and specific, to dive into a specific market, one of the agents on our team can absolutely help you look at that to see if you're looking to buy or sell from that perspective, what that would mean to you, but what it means in general. And when I look at our own production, that's more than doubled. It says our market's on fire.
I would completely agree with that. Just from what I'm seeing in my own piece of the industry, I would say that's absolutely the case for us as well.
Yeah, just amazing. It's all good. So how are we selling homes? Well, this is how we, sell a home in a virtual world. We if we're looking to get find the person. This is the sell side. We have a buy side of this as well. We meet with somebody, and I'm going to focus in on the listing side, Cheryl, for someone that wants to sell their home, because there's plenty of buyers right now, and we can walk you through the buy side. But on a sell side, we can do this all virtually. We do electronic signatures. We do need to come into the house for photos and the 3D walkthrough. Our marketing is great. Marketing is the same. We have a whole nother level of virtual marketing for open houses and virtual home tours. Once we get that done and we get, these virtual showings and in-person showings, we get to a contract, again, electronic. Earnest money is electronic. Inspections, they have to come back into your home. And then closing, you don't even have to go. You can have a virtual, talk about that. What's happening these days with closings?
Honestly, I would say 80% of my closings are not attended. The buyer is in another state. The seller is in another state. The title company is in their office. I'm in my office. Everybody does things remotely through mobile notaries or e-signature, whatever the case may be. And nobody's coming together in the room and signing documents anymore. I can't say 100%, but a large percentage is doing it remotely now. And very many of my clients have never walked into the property that they're buying. They've done all of their reviewing of properties and purchases remotely, and then relied upon the agent to do the walkthrough with them virtually, so that they know everything's been completed before they do sign their final closing documents.
It's funny. Do you know that car commercial that says, it's a new one, and they're buying virtually? Hey, can you kick the tires? Can you sit in the back seat?
Yep.
I love that commercial, because every time I see it, it's like, can you open the door there? Let me show you what's happening with this cabinet.
Mm-hmm.
That's what we're doing, from that perspective. Cheryl, it kind of leads me to a closing thought. Is it time to move? I mean, it's interesting to focus through with that, because only you can decide if it's time to move, right?
That's correct. And I know that we all still are wondering, what life will be like in 6 months. But I do think we have to look at our own individual situations and what's going on in our particular industries, whatever that may be, and what your needs are. And it may very well be time to move. It may be time to reevaluate where you're going to be in 5 years. And do you need to start that process now, find that place so that you're set for 5 years from now? I think all of those people who have learned Google, all their people are staying home until next year. Those are the types of people that are learning that they're going to be using their home for their office for a very long time. And you should really evaluate what works best for you. What's the best dynamic for you? Are your kids going to continue to homeschool? Just how are you going to utilize your personal space and really evaluate, is it time for you to move? And then talk to the professionals and let's see how we can guide you into accomplishing that.
Absolutely. You brought up a great point. The analysts are now saying, and I looked down at my notes, mid to late 2020 before the workforce comes back into an office building.
Correct. Or even into 2021.
Yeah. Yeah. No. Excuse me. Mid to late 2021. Thank you for correcting.
Okay. Yeah.
Mid to late 2021. I get so excited with some of this data that so sorry about that. Mid to late 2021. So that's a year from now that people aren't going to be going back into their offices, that they need a solution because, for me, it's very, when my kids were little, I've worked from a home office for over 20 years, well, maybe 30 years. And not just in real estate, but before that, when I sold software. And when my kids were little in our house in Chicago, I had a lookout basement that I could be in. I could be not there. I had a nanny upstairs. My life was good. But when we moved to Florida, my office became a room. So when they came in the door, it was like chaos.
Total disruption. Yep.
Right. I can't even imagine trying to do that from your kitchen table or in your bedroom or your master bath.
Right. And the other thing is as families are changing the way we work and play, and if we're going to become more permanent home use workers, we're working from home, you're also reevaluating your budget and how you spend your money. You're not driving to work. You're not eating lunch out. As someone who does a lot of real financial planning and how they utilize their funds may have more funds to utilize in addition to the larger buying power of lower interest rates to really think about what they want to buy because their day-to-day expenditures have completely changed in the last 6 months.
It's a super good point because after the lockdown changed, one of my clients is amazing and shout out, who you are. I won't give your name out. But he's a hedge fund and he trades on shorts. And it was easy when everything was shorting. I can't say that it's not easy now because he's amazing. But, he said what the American people are buying is just crazy. Boats and cars and RVs. And, Jennifer, our sales manager on our team, has a client that's an RV the distributor, and he's looking at a different home down here because they are just selling these RVs off the shelves, so to speak. It's amazing.
Yep.
So you're spot on. I mean, I think we're going to see different things where people are spending money for sure. Mm-hmm. Let's see if we have any questions that we didn't answer. Hey, Cheryl, what's your prediction for mortgage rates for the rest of the year?
I think they're going to remain approximately the same. They're going to have ups and downs like they always do, but we're not seeing any huge volatility coming.
Awesome. Another question, same viewer. Recently, I heard that this might be the first time we have buyers and sellers market simultaneously. What are your thoughts of that? Well,
I think we're both saying yes.
Yeah, that's what I feel. I think yes. I mean, at the end of the day, seller's market is when you have multiple offers and, it gets in a bidding war. Buyer's market is no one wants the house and you get to buy it for pennies on the dollar. Well, maybe not pennies, but, you get to buy it at a reasonable price less than. Spot on. That's happening across the place. We have some, even in our own larger market of Southwest Florida, single family homes on Marco, you can't keep those on the shelf in certain price points.
Right.
Under $1 million, they're getting multiple offers. It's just what's happening. And especially if they are updated, right?
Mm-hmm.
We've always had this, Cheryl, in Golden Gate City and Golden Gate Estates, where you get 9 offers. For whatever reason, you think you pick well, the first one blows up for financing or some other reason, and then you get 5 more. That market has been hot always and continues to be so. So it just depends. Yeah.
And I think that's great for the sellers, but for the buyers, I think there are more buyers, and it is an active market for them because they do have the ability to buy where they didn't before. So it's a really unique blend of a lot of people with a lot of opportunity to buy, and sellers who can pretty much know that their property is going to get sold.
And if it's not, then, it's probably a pricing issue or something along that. You should talk to your agent.
Yep.
Again, of the 107 families that the Bartos Group helped, we bring the buyer to our sellers about 30% of the time. So our marketing brings a buyer to your home. That's what we're focused on. Again, this isn't a sales pitch about us or whatever, just trying to give you some information about what's happening in the market in Southwest Florida. Cheryl, any parting thoughts that you have?
My only parting thought would be if you're trying to understand the market and want to see what your opportunities are, whether you're a buyer or a seller, reach out and speak to a professional. Really research all of the information, get different opinions, and plan out what you're trying to do. What we don't want in this type of environment is for anyone to jump unprepared. Get yourself prepared, talk to the right people, and then just do what's best for your family. And I think there's opportunity out there for everybody.
Right. Multiple offers means if you're not prepared, you don't win.
Absolutely.
And work with a good agent that has maneuvered that before and understands, because Cheryl, 10% of our homes are not appraising.
That is absolutely true. And that is something that you really have to work with an experienced agent who's doing the comps, who's preparing you for the possibility of a low appraisal. How are you going to work through your contract with your agent and your lender if that's the case? I mean, we have to be prepared. And I really believe that some of that is as a result of there's such high demand, but there wasn't 6 months ago. And so the comparables aren't reflective of the current market. I mean, that's your lane, but that's kind of how I feel that it is. We know the value's there, but we don't always have a way to show it on paper. Right. With the appraisals.
Inexperienced appraisers, not from the geography, maybe they're not inexperienced in general, but not familiar with that geographical area, really a problem. Making sure that, if you're selling or buying, that your agent's taking care of you and understanding that.
The one other thing I would add to plan is make sure you understand the timeline. With such high demand and everyone really being loaded to the brim with work, some of the timelines are starting to stretch out a little. With all the refinances and all the purchases, the appraisers are just booked completely. So it's taking them longer to get to properties. So we need to think about appropriate expectations on timelines.
Without a doubt, make sure that your agent is meeting the appraiser, making sure that they're interviewing the appraiser. There's a lot of things that you can do, again, working with the top agent that understands what's happening, because if your agent's only doing a few, 10, 12, transactions a year, helping that many families, they're not seeing it in volume. So by the time it catches up, so with us, we helped 107 families in those 3-month period, and August is churning the same way. I'll tell you what happened there is they all came at the same time because we were putting contracts pending, and all of a sudden craziness. 40% of our business is cash. So cash is still king. A seller will say, well, why should I take a cash? Well, if it's not going to appraise, we're going to have to do something.
Right.
So, there's some things that you need to think through. Any other last thoughts, Cheryl?
I don't think so.
You know,
Good.
it is a delight and a pleasure to work with you and to have you on our housing update. And so until September, I'm Mary Bartos with the Bartos Group of Premier Plus Realty, and we look forward to seeing you here in Paradise, whether you're buying, your piece of paradise or selling your current home. We look forward to helping you. Please feel free to call. Thanks.